All right, hello, boys and girls out there, laden across the great nation in which you occupy. Welcome to another weekly edition of Stock Market Mutterings. My name is Doug. Hopefully, you know that. If you don't, welcome. Welcome to this video today where I will try to do my very best to take a grope in the murkiness, to try to make some sense out of the stock market for you. Stock market. Have you ever traded a stock market? Let's do the stock markets. Hashtag stock market. So any guy, I can't even speak. What the hell am I doing? I got to clean my act up. Anyway, guys, welcome to today's video. Whereas I was trying to say I will take a grope in the murkiness, try to make some sense out of the stock market and provide some quality trade ideas with you. And I'll tell you what, don't we have a drama-filled week coming up? Because all eyes are going to be on the Fed on Wednesday. We had the CPI number. Let's talk about that first. CPI coming in at 7.9. I think all of us said, yeah, right, sure. I think we feel like it's about 20 because every time we go someplace, it's more and more expensive. Every time, whatever you were doing in December, it seems like it's 10 times more expensive. You go there, you're seeing the pictures all over online. It's like sometimes $6 a gallon. Some places in America, oh my goodness, what a killer. You go to the store, grocery store, Costco, a Walmart, or whatever, you come out, it's another $100 more than it used to be. I mean, people are feeling it, and it's going to continue to cause problems with this market. People are feeling crimped. You can make all the money that you want, but I tell you what, inflation is a killer, and it looks to me, feels to me like we're above 10. And like I said before, I don't know if the Fed has a solution for this. Unlike an economical cycle in the past of something that we had gone through the 80s. I know I'm old, but I wasn't trading in the 80s. I remember we had an oil crisis back then. Commodities had gone out of control. Wages were down. Wages are not pacing inflation now. But I wasn't trading, so I don't remember. I was just a little old boy doing little old boy things. So anyway, it's going to cause a problem. And then like when we were talking about some of these videos with COVID, what I'm trying to relay to people is the Fed can't control the commodities when you have COVID lockdowns and people aren't working and ships are stuck at sea out there in the long beach harbor just circulating with cargo on it and can't bring it in. They can't fix that. That's something that has to be fixed by employment, by people working, by speeding up the supply chain process. We can't do anything about the Russia-Ukraine conflict here. That's just coming by at a really peculiar time, right? Coming by at this time where commodities were already out of control as they were. And right now, for the short term, it doesn't appear that we have a solution. So I've been saying it now for weeks. The close now has been under this 4,300. We're at 42 going into this now. I do not expect anything whatsoever prior to the Fed. You're going to get these one-off bullish days. Let me open up the daily chart down here. I got the futures up real quick. They just now opened. You're at 42.13. But let's talk about this technically, because right now that's all we have to rely on is to try to judge price action, to judge the emotion of the participants in the market and make our trades accordingly. I'm just going to say this here, and I know there's a lot of new traders that came into this sport not too long ago. What you experienced last year, the year before, forget about it. It ain't happening right now. You're going to have to survive through this. When all these people were talking bear markets, getting their asses chewed out for being so negative, this is exactly what it's like. You got to be able to deal with it. You got to be able to thrive in this type of environment. We talked about 4,300 being a very pivotal level right here. Let me get out the old trusty pen, guys. Dispatched to that pretty quick. Wasn't able to get too far above that. We had a really big day. I think this was Tuesday. Really wall-to-wall, kind of bell-to-bell grinder. You're going to get some of those. First thing I want to say about that is don't fall into the trap of thinking 1 day or 2 days is going to reschedule a trend here. It's just a temporary bounce. Anything that happens pre-Fed is temporary. Now, maybe the Fed can do something here. Let's say give them the benefit of the doubt. But I don't think at this point, I think what we've done here is too far gone. And this is just the consequences in my personal opinion. I may totally be wrong about this, some of which we've discussed. You can't just give out this free money. It ain't free, right? You can't incentivize people to stay home and expect this. You can't continue to QE the market and support the market. You can't continue to just cut interest rates and create this and get away with it. At some point, we always say, you got to pay the consequences, and here's the consequences. Now, let's talk technically again. I want to go back to that because I'm just running around here. This has to be the level we're looking at, 4,100 now. This was the low of, I think, February 28th. I'm going to put 228. don't quote me on this perfectly, but I think that's about it. Whatever this low right here was, pay attention to that, and also pay attention to last week's low right above that. I think if you start moving down in here, or we perhaps could, we either trade sideways or we move down into here pre-Fed. And then depending on what happens with the Fed, maybe there's something there that bails this market out for the short term. I still think regardless, you've got a lot of problems laying out here. Until this conflict is over, the commodities are not going to stop. I don't care what technicals tell you in that degree. They're just going to keep on going. Gold's going to go higher, oil's going to go higher, and it's going to cause a trickle-down effect from there. You're going to stop spending money on entertainment because you're putting it all into your gas pump. You're going to stop doing things. You may not even travel. Airline tickets are going to be expensive. I mean, it's just going to go downhill. It's going to get worse before it gets better. So let's just prepare for that. Any moves below 4,100, it's going to get ugly. It's just simply going to get nasty, nasty. And you don't really have anywhere else to go till maybe you get to 4,000 flat. And that's from May of last year, and then maybe even down in here into the 38s. I think this is about deep enough. This is 20%. Even in this, I don't expect more than a 20% correction. That would be in line with just about what would be normal under the circumstances. And that's that. I mean, if you look at the Qs here, the NASDAQ, we take a look at the NQ, it's completely different. Nobody's interested in growth. And we were talking about this as well. You go back to July, you have all of these companies. I mean, I'm going to run through some that I know you guys are already seeing. It's old news. Shopify, all these big time movers. Look at this. Things down like, I don't know. It's let me put shop here. I got to get this. Yes, 1762 to 500. Oh my goodness. Docu. Again, 314 to 771. I mean, these things are going into penny stock territory. Zoom videos. Some of these deserve it because they were only up because of COVID, especially Docu and ZM. Look at 406 to 97. Roku. I mean, these are just getting blistered. And I'm normally somebody who loves to counter trade. I wouldn't touch any of these. We already know the story here with Peloton. These things are absolutely smashed. 129 used to be one of my favorite stocks. 21. I mean, everybody is getting it. PayPal. I mean, it's just coming all across the board here. Look at these. It's just absolute 310 down in here to 90. I mean, these things are down 60% or more. Surprising, the markets are even up to some degree, right? They're even standing upright, and they're not down even more. But when it comes to the NASDAQ, you're already in bear market territory. This is over 20%, I believe it is. Let me pull up the chart here real quick, whenever the computer decides to give you guys this beautiful chart. Yeah, we're already down here, ugly. And here, if you get underneath of this level, 13K, alert the villagers. You know, hide the women and children. Run to the hills, man. I'm telling you, it can get nasty. I don't have any individual stock picks I want to share. I didn't say the shameless plug at the beginning. If you need help, join me in my live trade room. We've done good with what we've had to work with. The count is up. Actually, I should say we've done great considering that this is the best start to the year we've had. It's amazing. Also, the penny pound doing well. But the ideas that I have are based on that day. Everything is so short term that I can't say, hey, this is a good one. Hey, this is a good one. Anything can happen at any time. And this is where us retail traders really have the advantage over everyone else, and why you've been training and why you've been practicing, because I'm just going to say it straightforward. Everybody's good in the bull market. You can throw darts. You can run your mouth on FinTwit all you want. Everybody's a badass when the market's going straight up and they're just throwing stuff. You think you're really cool, right? You read a couple of articles and you think, oh, I understand finance. This company's good, goes straight up. This company's good, goes straight up. I think this company's good, but it sucks. It still goes straight up. Penny stocks and all this other stuff, DMTKs, Tiger, Skills, those pieces of shit went from like 10 bucks up to 80. People not selling that crap, now watching it go back to 80 to like $2. They've given back everything. Guys, this is what you're paid to do. You're paid to survive through all of these conditions. There's a lot of money to be made to the shorts here, but you also have to be careful with them. I know that was a little bit of a rant, but that's where we're going here. What we were talking about last year. Are you prepared to trade an entire year? So we're now 3 months into this. There's no bullishness at all. This market's done nothing but go down and down and down. So you have to ask yourself your question, what are you going to do? You also have to do something because now you're in worse position than you were in January because that dollar you have in your pocket is worth less today, right? It doesn't go as far today. So you have to be very aggressive in where you put your money and to outpace inflation because no one's getting it from their work. They can't give you a raise as fast as inflation is moving. Now we'll get through it. Market will fix itself. 10 years from now, it'll be higher than this probably. But for now, we have to deal with this. So going forward, it's going to be touch and go till the Fed. I'm sure of it. It's going to be choppy. There's going to be opportunities here and there, both long and to short side. Just pick your shots. Don't fall in for the V-shaped trap. We are not going back to the old school V-shape, and this has been a long sell-off. We'll probably be down here for a little while unless the Fed does something magical and this war ends. Then that's different. But hey, this is all part of the process. Keep those levels, keep last week's levels on everything in your mind. So anything that you're trading moves below that post-Fed. Boy, oh boy, oh boy, oh boy. Anyway, guys, thanks for watching this video. Take care, trade well. And that's all I got to say. Cheers.